Hi, I'm Mike Gassewitz, CEO of IAIC. Welcome to another episode of In Focus. Joining me today is Krishna Beharry, portfolio manager responsible for our utility sector. Hey,
Hi,
Krishna.
Mike. Hi, how you doing?
Thanks. Good. Thanks for joining.
Thank you.
So this is, as I said, we're going to talk about our utility sector, see what happened in the quarter, and talk about our thoughts moving forward. And just a reminder for folks listening, utilities encompasses power generation, telecoms, and pipelines. So, Krishna, how did, from a market perspective, how did utilities fare?
On average, the utilities this quarter were flat to slightly negative. That's the average number, but if we drill down a little bit, like the best performer, for instance, was the Canadian electrical generators. They were up over 5.5%. And counter that, the US electrical generators were down over 5.5%. So when I say on average, they were just slightly down. There was some volatility within the subsectors.
Okay.
Yeah.
Any standouts in particular? Like you said, Canada. Well, actually, let's come back to that. Why do you think there's this discrepancy from a market
Canada,
perspective between Canada and the U.S.?
yeah, well, Canada's utilities are much more regulated than those in the U.S. And when it comes to investing in this sector, we like regulation because it causes predictable cash flows. And as an investor, I want to know that the utility has a predictable cash flow coming in to pay its dividends and so forth.
Okay.
So that's why they're a little bit more stable.
And from a subsector perspective, looking at telecoms, pipelines, any other thoughts on those two?
Yeah, so we're probably going to get into this a little bit later, but from a subsector perspective, the telecom industry is going through big change right now with upgrading to 5G, for instance. Big expenditures coming through, and higher interest rates don't really help that because telecom companies will take on a lot of debt to fund the upgrades that they need to do, and they have to buy things like spectrum and things like that. That's a big cost. And so with higher interest rates, when they take on that debt gets more expensive. So that's something that we have to keep an eye on when we look at these. So that's just one aspect of this of the telecom industry. But yeah.
Okay. So from a valuations perspective, what are our thoughts here?
Yeah, that's the counter to all of this is that, with the market downturn, we've seen valuations start to get a little more favorable. They're not as the stocks aren't as expensive as they used to be. And so we've actually, again, moving forward here, we've actually started because of that, increasing our weightings towards some of these.
Right, because we had, I don't know, probably 6-9 months ago, we had actually decreased our weighting, correct?
That's right, to the lowest
Right.
weighting we've ever had in IIC's history, in anticipation that higher interest rates would hurt the stocks.
Okay.
Yeah.
So, and I know, that's on another podcast in terms of interest rates. Have they capped out? Have they not? But fundamentally, from a valuation perspective, how the market has been reacting, and I know it's a quick summary, but we think, yeah, there's some good buying opportunities.
Absolutely. So we've started to increase our weightings in this sector just to take advantage of the decreased pricing and some stability in the market in general. We feel that the banking crisis, if we could call it that, is
Right.
maybe for the most part behind us, and interest rate stability is sort of on the horizon at least. So now might be an opportune time to take advantage of these lower prices.
Okay. Good stuff.
Yeah,
Krishna, thanks for this.
you're very welcome.
As always, folks, if you have any questions, don't hesitate to reach out to your accounting financial advisor, or feel free to talk to your portfolio manager. And as always, feel free to reach out to myself. Take care.